Hello, good morning, Texas and Louisiana. We're live on your TVs on the Smart Money Culture TV network, as well as welcome from around the world on LinkedIn, YouTube, X, and the rest. It's very good to see everybody. 2, 4, 6. Exciting show lined up today. We have a lot going on. Of course, the Fed came out with the CPI data came out yesterday. That was lower than expected. And then we had the FOMC meeting. So as soon as the data came out, and we saw, of course, leading up to it, everybody pretty much expected that it was probably going to be a bit lower. The markets were, they kind of primed. They move everything in. There's always people on the know, that absolutely know what's going on, and you'd like to think that they're not manipulating the market, but of course that's what happens, right? So we saw that starting to happen. We talked about it yesterday. The market was moving up already. As soon as that data came out, market really exploded, went up quite a bit across the board. You had the Dow up a lot, or whatever. I mean, for the Dow, right? A few hundred points. You had Bitcoin move up about 3%. You had everything exploded. Then we had the FOMC meeting where Jerome Powell comes on and he talks about everything, and he has now adjusted that it started out at the beginning of the year that we're going to have 5 interest rate cuts this year. That was the plan. I told you guys I went to a central bankers luncheon, and they were advising everybody that was going to be cut to 2. That it was going to be cut to 2, and they had slowly moved them down as we were going. And then yesterday, Jerome Powell told everybody the interest rates were going to remain unchanged, and not only that, but we were only going to have 1 interest cut rate this year. So that put a little bit of damper on the market. Let's see here. Of course, you talked about the job markets and stuff as well, and that just kind of recoiled things a bit. Of course, he says that he doesn't. I don't think anyone knows why people. He says, some quotes here. He says, I don't know. I don't think anyone knows why people are not as happy about the economy as they might be. We have. Anyway, I'm just looking for some of the stuff that he said here. Anyway. He says that the jobs report may be overstated, which, of course, the thing that people don't really realize about the Fed and unemployment is that they don't want, in order for them to bring inflation down, they don't want people to have jobs, and it's a crazy thing, but that's how they do everything. It's not, they basically they do monetary policy, and they fleece the American public, and they get the money from us using the monetary policy. It is a tax. And so part of that is they don't want people spending money into the economy, because just think about it. If you have $1 billion, let's just say, keep it easy for everybody, if you have $1 billion and that is valued at, let's just say it's valued at a ton of gold, okay? But you have that ton of gold, and then people start cashing in the $1 billion on that gold, but you only have so much gold to cash in. Then the value will drop, because hold on, am I explaining this a good way? Maybe that's not the best way to explain it. There's more dollars out there than gold, okay? And so they don't want you to spend it, because if you spend it, then of course they have to sell some gold to you, right? I mean, this is not it's not backed by gold, but I'm trying to make it an easy way to explain. I don't know if I'm doing a good job on it right now. But anyway, if you don't have a job, you can't spend the money. That's the long and short of it, okay? And so they don't want people to have jobs. And Jerome Powell is on record of saying that, and that's the way they do it. So they want unemployment high so that people don't have money to go spend. And that's the crazy part about where we live. Of course, you have G7 meeting going on as well. Biden has Adam or him, I'm not sure which, has promised that they are going to support Ukraine, basically indefinite war. We have nukes off the coast of Florida, I guess, over in Cuba. Another Cuban Missile Crisis. I don't know. Not really, I don't think. But they're doing their war games off the coast. I don't watch the news per se. I get my news really on X, so I see the different clips that are on there. But Putin's like a bit of your own medicine, guys, right? So that's what we do. That's what the U.S. does off of the coast, and we position all kinds of missiles pointed at Russia. Now, I did post a little bit yesterday about where the gold is. And I've talked about how the central banking cartel has taken over the United States, taken over most of the countries of the world. I've talked about it a number of times. But in 1933, with the help of President Roosevelt, there was a executive order. I think it was Executive Order 1601. And with this executive order, they confiscated everybody's gold, and they gave them $25 per ounce of the gold. $25 per ounce. I mean, right now it's like $23 or $2,300. Okay, just to give you an idea, $2,300 per ounce of gold. So that was in itself. But I mean, just think about it. Just even the fact that it happened is crazy, right? It's hard to even imagine that happening, right? I mean, they confiscated everyone's gold, and that gold, as a matter of fact, is sitting, most of it anyway, I would say, is sitting in the Federal Reserve Bank of New York. And this is a post I put. It's actually a continuation of a post, which maybe I'll go to in a minute. But the gold is in the Federal Reserve. I responded to somebody, Bank of New York, with the help of President D. Roosevelt. Executive Order 6102, the central banking, I meant to say cartel, I said cabal, stole everyone's gold, giving them paper money in return for $25 per ounce. And the Fed, and get our gold back. And I linked this resource here. And this stuff is all, so this Federal Reserve Bank here, nobody is allowed in this bank. Okay, you have to be part of a certain group. Yeah, so you should do your own reading on this. The Federal Reserve Bank of New York has security so tight it is entrusted with more than U.S. gold bullion than the famous Fort Knox. I'm on record of saying that I don't think the U.S. has much gold anymore. I think Nixon had to take the country off the gold standard, which it wasn't really on the gold standard anyway, because you couldn't trade it in for gold. So it was a fake gold standard. It was a gold standard for everybody that wanted to trade in their U.S. dollars, foreign, and I'm sure the bank, I'm sure the Fed is a foreign entity. I'm sure they were able to trade in for gold as well, of course. They were able to trade U.S. dollars in at $35 per ounce, get all the gold. And then Nixon, quote unquote, took us off the gold standard, but all he did was stop foreign countries and foreign entities from being able to trade their U.S. dollars in at this ridiculous price of $35 per ounce. And actually, it wasn't a ridiculous price because the money supply was lower, and so it wasn't as inflated, right? And so what they've done is they've continued since that happened to inflate the money. But the money was already, inflation was already a problem, because even though that was, quote unquote, tied to gold, you couldn't trade it in for gold. So it was all, theoretical anyway. And inflation was still a problem because they were printing up more dollars than they had gold to back. So that has always been the deal of the central bank. That's how the central bank operates. The central banking cartel operates. Russia is not part of the central banking cartel system. And that's why we are at war with Russia all the time. And as well, Syria is not part of the central banking cartel system. And that's why we're always at war with Syria. When you control the money, you control the country. If you can tax the people as much as you want with the money supply, then you're in control. You can pay whoever you want. If somebody's price is $1 million, you give them $1 million. If it's $1 billion, you give them $1 billion. If it's $100 billion, you give them $100 billion. It doesn't matter. It's a very interesting situation we've gotten ourselves into. Nobody talks about it. The same, I'll get into more of that at a different point. But we have to get ourselves off this Federal Reserve system. Until we are off the Federal Reserve system, we will never be a free country. Absolutely, we will never be a free country, and the wars will continue. In 1913, the central banking cartel was able to push through legislation after most of the opposition to the Federal Reserve Act was died in the Titanic. JP Morgan just happened, boy, I'm on a roll this morning. JP Morgan just happened to, at the last minute, not go on the Titanic, just like Silverstein decided not to go into the World Trade Center that morning. Coincidence? Divine intervention? A conspiracy? I don't know. It's interesting. Don't you think it's interesting? I think it's interesting. But what's not interesting, what is absolutely unacceptable, is the fact that we have a cartel that controls the country, and most people don't even understand. And that's why we can't get out of the wars. That's why no matter who we get for Speaker of the House, it's always the same stuff. That's why it doesn't matter who we really elect. Little things can change, but big things don't change. And one of the reasons why the immigration coming into the country is for votes, yes, but it's also for money. It's big money. First of all, it's money in a number of ways. First of all, there's a bond issued for every time there's a new baby born, or a new they do it for all types of different things, court cases, they do it for, but every time somebody enters into the country, they're issuing a bond, and that's why they're registering a lot of the people as well. And then the people come in and they issue a bond for that person, and that bond is traded, and as well that bond is money, and then now they have more money to flow into the system and trade. But you don't have it. There's all these people that go around and they say, well, you can get that money back, but it never happens. Theoretically, apparently, you can get this bond money back, but it never happens. You can try, but it never happens. Okay. Anyway, like I said, I'm on a roll this morning. It's really great to do the show. I love it, guys. We have Trump coming. Trump is coming to Detroit. I should say going. I'm not in Detroit yet, but coming because I'm supposed to be there. Coming to Detroit tomorrow. Tomorrow at the People's Convention. We have the People's Convention. Turning Point has done a great job putting together this People's Convention. Everyone's super excited about it. Let me get my thing up here. Oh, there we go. Put myself down. There's the big guy speaking at the People's Convention. He's back this week. He's going to be there. Everybody's going to be there. Make sure that you get your tickets. Get your tickets today and use code IMPACTMONEY. Impact Money. Where is this one? Here, turning Trump in Detroit. Put a little banner up there. Trump on the stump. Trump is going to be in Detroit. He's going to be killing it. You know how Trump does. I think that I can't imagine. It's hard to imagine, in a way. It's hard to imagine both things. It's hard to imagine, one, that they're going to let him win, but two, that he doesn't win, right? I mean, it's pretty hard, right? I wouldn't be surprised if they put him in jail and hold him in jail. And he still gets voted in. I mean, we'll see. Who knows? But it's a pretty interesting situation we have in. But get your tickets there. It's you can get a 25% discount. Use Impact Money. That is a discount that we negotiated for you. And yeah, we want you to take advantage of it. So I'm going to continue in a bit here as we move forward. I am, like I said, I am a bit on a roll. Let me just look at my thing here. What else? So Jerome Powell announces only one rate cut, interest rates remain unchanged. Elon. Oh, and then I got Matt Dixon with more market reports. Elon wins his stockholder vote. His compensation, which I think was like $56 billion or something like this. I mean, it was a lot. Compensation, and Tesla is moving to Texas. Texas has no state income tax, and so and a bunch of other benefits that I'm sure they gave him. But that's going to be yeah. So they're moving. They are moving to Texas, and that's big news. Of course, the world's richest man, I think, or right up there, and he is moving Tesla to Texas out of Delaware. Delaware is historically one of the really great places to have your LLC or corporation. It is with also no state income tax. All right, I have the market watch queued up here from the great Matt Dixon. Talk about the markets. Of course, he's going to chart our way forward here. They are launching, relaunching, I think, eBay. And so this week he has been very tasked. Share my screen here. Hold on here. Boom. And here we go with the Market Watch segment of the Impact Money Show.
Good morning, Bruce, and morning, Impact Money viewers. So an amazing market update today. We had some news out last night. Of course, the Fed set the interest rates unchanged, absolutely as expected, in line with expectations. So that wasn't a big market mover itself, but the market mover came earlier with the CPI news that came out. So we'll just take a little look here, first of all, at that CPI news. So we can look at it here over the past year, how CPI has fallen and continued to fall. So from 5.3% a year ago in May, 3.6%. And then last night we came out 0.2% below the previous reading, so at 3.4%. And what's probably more important is we actually came out below the expectation of 3.5%. So we came out 3.4. That was the core inflation rate. And the headline also fell as well and was below expectations. So this is good news. It shows that basically the inflation is falling. It's not falling as fast as people would have liked. But bear in mind, when you're trying to land a plane, like landing the economy, you don't want to nosedive into the runway. You basically want to have a steady landing. So as you're approaching the runway, you want to slow down those reductions in inflation. Otherwise, you'd probably crash and go the other side and have deflation. And so to be fair, I think the Fed are doing a reasonable job at the moment in taming inflation and yet keeping the economy healthy. So we've already had rate reductions from Europe and from Canada. And that's really a sign that their economies have been slowing dramatically. And so far, the American economy is actually staying reasonably robust, reasonably healthy, and they're somewhat insulated from all the geopolitical risks. So at the moment, the US dollar is the place to be. The American economy is probably the place to be if you're looking to invest into risk assets. So the news is reasonably good. The Fed gave a fairly balanced outlook, saying they're still going to be watching, being very data dependent going forward. But this so far is good news, and the market reacted quite positively to that. So when the CPI news came out, we got a really good bounce. I mean, I'll just look, for example, here. I'll just open it out a little bit so you can see really the bounce we got from the low here. We can see the green candles up. That's indicative potentially of a wave one up, and we're getting a wave two down, and then hopefully we're going to push up in wave three further to the upside. So just to look at that in further context, of where we're actually at with Solana, for example, we're looking at here, we can see that we've been moving up in impulsive fashion. We've had 5 waves higher to take us up to this blue wave 3. So basically, I need to go out a little bit more here just to show you the whole picture. So we did have a wave 1 up in blue, a wave 2 down in blue, and then the next move up was a wave 3 up in blue. That itself was made up of 1, 2, 3, 4, 5 in red. So that's really a perfect impulsive move, 1, 2, 3. We're now looking at working on a wave 4. And I think we're just partway through that correction. This is looking, it's a relatively long-term move here. We're looking at a couple of years for this whole impulse to work out to the upside. So I do think we've got new highs to come above that 210 that we had previously, and probably to new all-time highs, up around the 260 level, most likely. But for the time being, we're working on this correction. And what's interesting is, from the top of wave 3, we've had 5 waves down. Interestingly, wave 4 doesn't overlap wave 1. It can't, in fact. It wouldn't be labeled this way if it did. That would invalidate the count, but it's valid. We have 5 waves down. Now, it's a small 5-wave move. I'm expecting it's an A wave, and I think we're working on a B wave. I don't think the B wave is yet complete. So I think we're looking at a 5-3-5 correction, which would be called a zigzag correction. So I think that this 3 waves is actually in the form of a WXY. So we have an ABW, an ABX, and I think we're going to be working on ABY to complete this B wave to the upside. Then we get probably another sell-off to the downside before we then start to really rally towards those highs that we just talked about. So just to open that out a little bit to see exactly where we are at the moment, I just expand this chart so you can see it more clearly. So this was the move down we had from the top, from that previous local high of 188. That was the top of the W wave here. And we've moved down in 3 waves. So that's quite interesting. The 3-wave move down is indicative of an X wave. So we've had 3 waves up for the W, 3 waves down for the X, and we'd expect 3 waves up for the Y wave. So it's also quite interesting to see that we have here something called hidden bullish divergence. And that's when you get higher lows on price and you get lower lows on RSI. And so it's telling us that there should be a continuation of this upward trend on price. And it's been amazing. Again, quite a powerful indicator when you combine it with some other interesting things like the candle patterns, which again are quite positive here. So we see the continuation of this upward price trend here. We're expecting it to continue. That's precisely what's happened. And we appear to have, again, if we just go into an even shorter time frame, we can see here that we've potentially had a 5-wave move up. That's giving us a small wave 1 and an ABC wave 2 down. So I am hoping and expecting to get some further movement up today. So what will spur that? Most likely it could be PPI news today. So that's further kind of evidence about inflation, producer price index, about prices paid. So that will give us a further read on inflation. And if we get some positive news there, that's fallen at or even more than expectations, then that could be quite positive for risk assets. And it could be the final piece of the jigsaw to give people confidence that we are now moving higher. So there was a lot of fear the other day, as we mentioned. There was a bit of a sell-off coming into this CPI decision. And then once CPI came out better than expected, we've started to move gradually to the upside. But we need to see further confirmation. But the charts are telling us that the likelihood is we are going to move to the upside. And we got some really positive moves. If we just move over to the SPX, the S&P 500, we can see, and as I actually said yesterday, we were going to push higher above this resistance line here. That's precisely what happened. We got a really good push up yesterday on CPI. So everything is performing as we're expecting. And there's no reason at the moment to expect that to stop. So a lot of people, I've been hearing people say that we're at or near all-time highs on the market and that we're probably seeing the highs or about to see the highs in the market before a longer-term turnaround. We need to wait for evidence to tell us that's the case. So we don't want to jump the gun. At the moment, things are still looking quite positive. looking bullish to the upside. And as long as that's the case, however irrational you may feel the markets are with all the money printing we've had and so on, the fact is you have to follow the market. The market is the best arbiter of price, better than indicators. So when you look at the actual price, what's happening with price, and the fact that we're still in basically the impulsive direction is still to the upside. As long as that impulsive direction and trend is to the upside, this is the big thing that traders always say, trend is your friend. Do not try to trade against the trend. Do not try to pick tops or pick bottoms in the market, because that's notoriously difficult to do. And markets will continue to the upside or to the downside for as long as they want to. And basically, you need to wait for a turn in the market, and you get confirmation, especially from these divergences and simple candle patterns. There's lots of indicators that can tell you. But for the time being, we are pushing higher and higher. So we've got, just jumping into oil here, we've broken above that support line here, which was tested many times. We broke it. I didn't think we'd break above here, but oil long term is actually still low priced. If you looked at, I'll just jump into, I'll actually jump into monthly even to look at the real long-term trend on oil here. It's actually very, very interesting. It's hardly moved in so many years. Look right back from here, where we are now, around about where we are now. It was this same price back in 2007. So, are we back here? 2006. So we're talking 18 years. Oil price has not changed in 18 years. That is phenomenal. The dollar's devalued. So oil price has actually, in real terms, gone down when you compare it with other assets. And what I'd like to do is just compare that with gold, for example. And we can see over the same period of time since 2000, gold has appreciated massively. So gold has appreciated in real terms. Oil has actually depreciated in real terms. So that's quite interesting. I suppose it tells us that there have been adequate supplies of oil. There's been new finds of oil. Oil and gas supplies and finds around the world have been phenomenal, but also extraction techniques have improved. And I suppose that's the reason why we're not seeing oil jumping massively. But I think it could be set for a rise sometime soon, but I think that will probably be geopolitically driven rather than anything else. So we do keep a very close eye on geopolitics. We mentioned yesterday in the show that there are concerns about Russia, arming up and being effectively a cornered beast and could act unpredictably. So we need to keep a close eye there, a close eye in the Middle East, with Israel, with Iran, with Lebanon, Hezbollah, etc., etc. So there's a lot brewing that could actually, come to the boil and, give us some potential issues in the risk asset markets. But for now, these markets, I'm actually genuinely quite surprised to see such negativity across the markets today, because the news was really good yesterday. The CPI news was good. The Fed poured a little bit of cold water on that, just saying they're still going to be very much data dependent, etc. But I do believe this is probably just a short-term pullback, and maybe the PPI today will give us the good news that we want to hear. So we will just continue to look around some of the other tokens. We've had pullbacks in virtually everything, even our solid BNB. If I move to the 4-hour here and just expand that out so we can see the movement. We've even had a pullback in our very, very stable and secure BNB token, which has performed really well of late. But we've had a bit of a pullback. I think that this is, even if it turns out to be a 5-wave pullback, we'll still get a good correction back to the upside. So I think that very soon we will see some more upside. And as I say, I'm hoping PPI will be the one that spurs that ahead. Even Ethereum, we had Ethereum, didn't we, with the recent data, with the recent news of the approval of the ETFs. So that will soon hopefully be bringing a lot more money back, a lot more money into Ethereum. We'll get more institutional adoption of Ethereum once those ETFs actually take off. So I'm actually a little bit confused as to why Bitcoin, and we'll jump back to Bitcoin now, or we'll jump to Bitcoin. I'm a little bit confused as to why Bitcoin is not higher priced than it is. We have seen massive inflows into Bitcoin, absolutely massive. And there's a lot of money locked up now by those Bitcoin ETFs, a lot of Bitcoin locked up, I should say, really, by those Bitcoin ETFs. So all of that basically supply being mopped up by these ETFs. I'm surprised that we're not seeing, and I don't know quite how the price could be manipulated, but it doesn't make an awful lot of sense to me that Bitcoin isn't higher. But potentially we have seen the end of this correction. I mentioned yesterday, I did talk about how we'd had a WXY correction to the downside. That is an ABC W, ABC X, ABC Y. That's a very typical WXY correction, making up a B wave. And now I'm expecting we'll move impulsively to the upside to take us basically higher here, as I've shown so far from yesterday's CPI. Just before the CPI, price started to rise. We've had wave one up, we've had an ABC wave two down. I do expect, as I say, I keep saying this, I'm expecting prices to go higher, and they seem to be holding back a little bit. That so often happens that when before a big price move, you actually often get stagnation of the price. Even when you get good news coming out of the market, you get a bit of stagnation. That actually causes a bit of impatience by traders, particularly retail traders, who lose patience and basically cash out and just say, I can't sit on this, there's too much risk, etc. And they cash out, and then that's when the market pumps to the upside. So I tend to believe that's probably what's going to happen. So the big driver is going to be, we've already seen a big movement down last night in dollar index. So this dollar index moved down sharply when we had the CPI data that came out weaker than expected. We have moved up a little bit since then. And I did think that we'd probably completed the move down in dollar index. You know, I said we'd had basically a WXY move down, although I have had this Y wave labeled lower for some time. So I'm kind of thinking that maybe we do have somewhat lower to go. So if I look at some Fibonacci extensions here, we can see if I measure this W wave, the magnitude of the W wave there, and just transpose it to the top of the X wave here, we haven't yet reached 100%. So the 100%, well, we can see, I've just put a line there so we can see more clearly. Horizontal line there at 100%. So you can see here, I am expecting further movement down, and that's if we only move to 100%, but that would normally be expected. I would hope, ideally, like we saw with Bitcoin, where we saw, and I'll just go back to Bitcoin very briefly, where we saw the wave here, this Y wave, was equal to the W wave, and then we got the X wave in the middle. So let's just remember that the wave here, the Y wave, was equal to the W wave. And if we go back to dollar index here, I'm thinking and expecting the most likely, the Y wave here would most likely be equal to the W wave here. If that's the case, then we do expect lower prices to take us to at least 103.77, and we're 104.80 now, so quite a bit lower potentially to go to finish the movement down on WXY. Before then we might start to move to the upside. So that would be inversely correlated to risk assets like Bitcoin. So I'm actually expecting we should get a further fall, hopefully spurred by PPI, as I say today. If we get weak PPI, that should take the dollar index down and test these lower levels. But the inverse correlation with Bitcoin and crypto assets would mean that if dollar index falls, then we should get a rise in those crypto assets. That's my base case scenario. So just looking at gold, again, we had it labeled as, we've got from the top, we basically had an ABC down. This is all corrective movement. You can see it's all overlapping. And I didn't mention that enough probably with the other charts we looked at, but all this overlapping just means it's a corrective move down. We do expect all-time highs to come at some point with gold. So I'm quite bullish gold long term. And the interesting thing was, as I say, we looked at the oil And oil over the long term is actually down in real terms, really. Over the past 18 years, we looked at it and showed it was down, and gold was much higher in real terms. Well, while we've found massive new supplies of oil and we've improved the extraction techniques for oil, so the world has very much been awash with oil. Remember 30 years ago, well, some of you might not be that old, but 30 years ago, they were talking about the world running out of oil in 30 years. But in that time, we have found massive new reserves, and the extraction techniques have advanced phenomenally. So we genuinely have been awash with oil, and that's why oil prices, despite the current geopolitical tensions, oil prices have actually gone down in real terms over the long term. But gold is a different story. The gold mines, as I mentioned yesterday, they're actually running out of gold. So there's declining amount of gold that they're able to find and mine, and there's actually quite a substantial demand for gold. You know, we've seen governments, central banks around the world now beginning to hoard and store gold. Russia, China, to name but a few. So there is massive demand for gold, and there's diminishing supply. So a little bit like Bitcoin, where we talk about that ideal scenario of basically a diminishing supply. So we've got diminishing new supply of Bitcoin, but we've also got increasing demand through ETFs and even retail as well. So we've got the supply and demand both squeezing price higher. And over the long term, as I say, I'm surprised Bitcoin isn't higher already than it is. But over the long term, we should see Bitcoin squeezed higher. And I think gold is exactly the same, that we're beginning to see diminishing supply of gold, but we're still seeing substantial demand for gold, ongoing demand for gold. So exactly like Bitcoin gold, we call Bitcoin digital gold. They're working the same way with the supply and demand, which should squeeze price higher. Short term, we'll get these pullbacks. It might be a bit painful if you just jumped into it, but longer term, I think these are positive, and they should probably form a part of any well-diversified portfolio. I'm talking about both gold, precious metals, and Bitcoin in particular. I think they should all form part of a diversified portfolio because they're what are called uncorrelated assets. And within the diversified portfolio, Markovitz, who's a Nobel Prize winner, said you need to hold as many uncorrelated assets within your portfolio as you can to diversify risk and get the best possible returns, or risk-adjusted returns. So that's good guidance from a Nobel Prize winner about how to structure your portfolio, and we should probably listen. So just looking very quickly again across the board, we're seeing the memes again. They're not actually falling that much more than anything else. They're actually these are some of the big memes there, and I think there is some sort of divergence between the small memes. I mentioned this yesterday about the shitty memes and the big memes that actually grow to have a real use case, like Book of Memes has. It's not even a meme coin really, but Doge has real use case now. So they're acting more like a real token with utility. So that's why their price movement is somewhat suppressed. But GameStop, that one that we've followed a little bit, is down sharply again today. And as I say, I think with these memes, whether they be meme tokens or meme stocks like GameStop, I personally don't like to dabble in them because I do know that it's only those few who are able to manipulate the markets, and actually also the influencers who manipulate the crowds. They manipulate us retail users. And so I prefer to steer clear because it's them who take the positions early, then they move the market, then they cash out, and it's the majority who lose out at the expense of the few. So I prefer to steer clear of the real memes. But some of these meme tokens, which have developed real use cases, are really quite exciting. And when the market does move up, they tend to move really well. So that's pretty much it for today. I will just take a final little look at Litecoin, which again, we got a bit of a bounce yesterday. Unfortunately, it looks like it's a three-way bounce for now. I don't see this at the moment looking as though it's impulsive to the upside, so a little bit worrying. and we have entered that stop loss zone once again. In fact, we're just above that stop loss zone that I have labeled. I've said there's a stop loss zone here. It shows over the long term that price often has tested or jumped into this stop loss zone. It fails and pushes higher. We're actually above it right now. So I think it's actually reasonable risk reward. We need to see whether this resolves to the upside, but I think, you know, we're at the bottom of this parallel channel, or it's a rough parallel channel we've got here. We're in the stop loss zone, so I think we're just above the stop loss zone. So I think we could enter a position potentially with a reasonably sensible stop loss. So your potential losses will be small, potential gains will be big. So I'm expecting a turnaround today. Just to summarize, I don't know what the geopolitical news might be. I think Bruce will have a lot more to say about that. But from a fundamental perspective and from a technical perspective, I think there's good support in there for crypto. So I'd be interested in nibbling away, doing a bit of dollar cost averaging and looking to add at these sort of levels for a potential pump that I believe will come, hopefully with CPI news today. So I hope that's been helpful once again. Look forward to catching up with you, hopefully in person tomorrow. And thank you for listening, and bye for now.
Well, there he is, the great Matt Dixon with his Market Watch report. I'll tell you, it is pretty interesting when you start to look at all the factors coming in. And of course, he said Bruce will talk more about the world factors. I do think that is happening. You have, you know, the G7 going on. They're going to, they have everybody. I think people are starting to figure out now that when we fund a war, when we say we're going to fund a war, and guys, the war is the cheap part. That's the cheap part. The rebuilding, it will be 3 times as much at least. So you see these $100 billion that they want every 2 or 3 months from us, which cost an average family about, I think, what was it? Anyway, I'd have to do my numbers again. I don't want to say the wrong numbers, but it costs thousands of dollars. It costs the normal person thousands of dollars, the normal family. But when you look at that and you realize, I mean, like, look at Ukraine, like their entire government, we're paying their entire government, including their retirement plans. I mean, it's absolutely crazy. And then God only knows what we have going on with Israel. We're probably paying all of them too. And this is a very rich country, very, very wealthy country. And the amount of aid going, quote unquote, aid going over to these countries in wars that, are these wars ever going to end? I don't think the wars will end as long as we're funding them. I don't think that there is I don't think there's an end game. And that has been the MO, the modus operandi of the central bank funding these wars since its inception here at the Federal Reserve, since its inception in 1913. We have been at war basically since its inception. World War I started in 1914. The FBI started a little bit before that. The FBI's first job was to quell the people that were against World War I. People don't like war. Banks, the banks, they like the war. The banks like the war. So I have some other stuff to go over. I wanted to talk first about Insect. Insect, of course, is one that I've talked about here and there. Insect is a token. It's built on the TON chain. It's on the TON ecosystem. And they're doing a lot of exciting stuff. So if you look at some of the tokens that have extreme potential, I have Insect in as one of these, and I have been talking about it a bit. They are going to be listed on a new exchange. That should give them a nice bump here. I'm going to switch my screen share. Boom. This is their Twitter account. Insect will be listed on Dex Trade. We're excited to announce that a new coin, this is on Dex Trade, new coin Insect will soon be listed on Dex Trade Exchange. This new coin will be available for trading on our platform in the coming days. We can't wait for you to try it out. The following trading pair will be supported: Insect USDT. So this will now be a USDT trade for them. Right now they're trading against TON only on another DEX, D-Dust, I think. At DEX Trade, we're committed to making cryptocurrency trade safe, trading, and affordable. Some more from them. So that's good. You know, the more exchanges that they're on, the better off, most of the time, the better off these assets can be because more people have access to them. So it's trading under INS. Okay, it's INS that it's trading under. Next rally is imminent. They say this is Trader PA. They're starting to get some more focus on this, okay, and some more people talking about it already from a lower low, but I'm adding my position, aiming for higher targets. This is from the account here, Insect VIP. Dear Insectors, we're happy to share that Insect has completed its 2-month journey. So it's 2-month on the TON chain. And we would like to say thank you for contributing and sharing and showing your love and support. To see the recap, let's see the recap that we've achieved so far with our community. They built the INS trending bot with reasonable rates. Cool, easy to set up. INS buy bot. Built Insect play during game. Went live at the first tournament. Winners already announced. Collaboration with big Twitter influencers, including the INS Power Shilling TON chain everywhere. This is so important. Huge Twitter following and many active communities on TON. Insect minigame went live on Telegram platform. CoinMarketCap, which is CMC, and CoinGecko live already. Done PR on the websites. Dex Tools and CoinGecko. Dex Scanners, socials, links verified. Insect old plus exclusive NFT holders get rewards on a weekly basis, which is pretty interesting. I talked about that yesterday. The InsPad under development and already shared a preview of what's going on. So 2 months, they've been working at it. I am bullish on Insect. Check them out. You can go to their X page, insect.vip, and I think that is a good one to look at. So I think that as we move forward, the next the coming days and weeks are really important in the coming months. I mean, this is obviously there's elections going all over the world, okay, and we are in some crazy times. I'm going to play an interview that I have from Consensus. And these two gentlemen that I have here, this is Brian Young and John. They have Pledge Pool, a new and novel fundraising platform, and this is from Consensus.
And we are back here at Consensus 2024. About halfway through the first day, although most people have been here for a while already.
A few days at least.
For a few days at least. I have with me here Brian Young and John Witherspoon, and they're with Pledge Pool. This is a new novel fundraising platform. So tell me a little bit about Pledge Pool and then what brought you here to Consensus.
Well, first of all, Bruce, thanks for having us. Appreciate the opportunity. So Pledge Pool is a new way to do project funding. So we have de-risked traditional venture investing or project funding by kind of turning it on its head. So essentially what we do is we take it's a composable platform. You can compose these pools, right? And each pool, you stake tokens, right? And then those tokens get staked to a reward, a staking reward. And then we use the staking rewards to fund the project. At the end of the pool, when the pledge period is over, anybody who staked the tokens gets their tokens back, where they can pledge them to another project, and the beneficiary of the pool gets the funding for their project.
Yeah, it's cool. So basically, you put your money up, and then it's staked, and that's what gets paid out. Well, so where does that liquidity come from?
Depending on the blockchain, or for a variety of different sources. So these pools are unlike something like Lido or Rocket Pool or something like that. These pools are composable, right? So you can create the pool to meet your fundraising goals.
I understand. Cool. Yeah.
And it kind of flips the old model of a GoFundMe or a Kickstarter where you're just giving the project money and giving them goodwill. In this case, you're staking it. If you believe in the project, you can keep your stake there.
Uh-huh.
If you want to move it on, it becomes reusable. You can use it to fund another project.
Cool. So what are some of the coolest projects maybe you guys have seen that are on the platform now?
Well, we did a proof of concept in Guatemala with people who were unbanked, new to crypto and unbanked, which, you know, this is the kind of the promise the industry's been talking about forever, right?
Forever, right?
2/3 of the world's
We're gonna
population.
bank the unbanked.
Yeah.
Nobody
let me
knows any of the unbanked.
Yeah,
we're gonna bank them. No, I'm kidding.
Yeah, let me tell you that it's a very challenging environment,
Of course.
right? So you know, through that experiment, we were able to get people to create these pools. We had about 4,000 people using these pools to fund projects that they were interested in. And you know, the people that we were dealing with were you know, kind of almost they would make a couple dollars a day. These were very
Wow.
poor people.
Yeah.
So one of the driving force behind us is like, obviously we can't lose their money, right? That would be immoral, right? To do that. So that was kind of the genius of the idea. Like, how can we make this project funding much less risky and actually more efficient too? So if you look at project funding platforms like GoFundMe and Kickstarter, they dole out about $2 billion a year, and they have about 140 million users between them. Blockchains today, according to StakingRewards.com, put out about $6 billion in staking rewards every year, which is 3 times, you know, what these social platforms are putting out. And the idea is that the capital is reusable, right? So it's $6 billion every year, right?
Wow.
Kind of like an endowment approach.
Right.
So we're just living off the yield.
So that is okay. So now I'm going to take it out of the box for our viewers because I know some of you didn't understood it, and some of you didn't, right? So there's different protocols that give staking rewards and they give yields in order to you lock up your coins, and then what they're doing is funding the different projects with those rewards and with the yields. Correct. And then of course that's why it's reusable, and that's where the liquidity, which was my first question, is coming from, because you get those tokens. Sometimes it's a liquidity token, and you trade it in.
Right. Correct.
And then the projects we support, they also have the ability then to distribute their own tokens through those pools. Yeah. So they're getting the yield to sponsor their work, and then the people who participate in those pools have an opportunity to also get some representation for the project that they're supporting.
Yeah, and you don't have to lose you don't have to lose liquidity. Actually, ever really, in theory, you wouldn't lose your liquidity.
You don't lose. Yeah, you don't lose your money. Your principal, right? Yeah. It doesn't go away. So and we are kind of starting small with you know, doing this on the blockchain. But you can imagine that this would have some pretty interesting ramifications in a larger context, right? So, you know, so the U.S. government pays out $700 billion a year in interest on their debt, right? And if you would take that $700 billion and then just buy the bonds with it, the money that would generate would keep going. Okay, so there's also instances where there are a lot of institutions, pension funds that can only they can only invest in, you know, AAA grade paper or U.S. government securities. Yeah. So when interest rates go very low, you know, they have a problem, you know, keeping their pension payments going or generating cash. So what we could do, what we're proposing to do with our system, is allow them to buy U.S. Treasury bonds. Then we take the Treasury bonds and buy equities for them. So they've got the security of a locked of a AAA structure. But they're taking the yield from that and putting it into riskier things, and hopefully those will pay off and juice the. That's pretty interesting. Juice the return. So then, if you don't mind sharing, what are the best yield or staking rewards that? I mean, which ones are the best ones? There's a really good site we use. It's called Staking Rewards. Shout out to StakingRewards.com. Okay. Yeah, we use their data.
They've aggregated all of the data and they show us. So it's a combination. I mean, we can have a high yield for staking reward. Right. But that might be very volatile and a little more risky. But then you can also have something that's a little more consistent, you know, but a lower yield. So it depends on where you want to target.
And let me take that out of the box a little bit too, just for everybody. This is pretty high tech stuff. It doesn't sound like it at first, but it is. So in a liquidity pool, if it's volatile, you can actually lose some of your liquidity and end up with more of one side than the other. So these types of things can happen. And yeah, of course. So you have things that are higher risk than others.
Right. But it doesn't eliminate all risk.
Of course.
But it
it's not financial advice either.
it's not financial advice.
But it,
Yeah.
but it reduces.
The goal of the project is to reduce the risk associated with funding projects that are innovative. I mean, the venture capital community, I think, if they get 1 out of 12 investments pays off, that's considered a very good record. Right?
They've lost all that income.
Yeah, the 11 they lost. Yeah. But those aren't bad numbers.
Right.
Yeah.
Well, as long as that 12th one is right.
Well, yeah, you want a unicorn. You want
But this model, it makes it reusable. So now we don't have to lose on the 11 losers.
Yeah.
Right? We can just shift that over and put it on.
And I think the second thing that makes this kind of interesting to blockchain is that other than traditional software companies, blockchain development requires a lot less funding to get started. Because the blockchain itself is so rich in functionality that it's like you're starting off with a huge base.
Right.
So it's possible to fund applications with a lot less money. And one of the downsides of the system that we have is it requires a lot of capital.
You have to have a lot
of capital to generate the real yield for the projects. But what it does, there's two interesting side effects. Is one, you can create like a continuous source of revenue or not revenue, but investment for a project, right? And it makes that capital reusable within a blockchain. So if I'm a blockchain and I have a staking reward, right? And I'm paying people to stake their tokens. They just take that stake and put it in their pocket. Well, if they were to take that stake and put it to a project that was building on the blockchain, that
attracting users.
That would create more utility for that blockchain, which would create more users, more demand. More demand creates more value creates a higher token price, and then we just go into this cycle.
and most protocol, I mean, they use a grant system,
right?
To try to sponsor projects, and it's just very, very inefficient. So doing it this way, it's reusable capital. It's just, I'm not just laying a grant on you. It's going to be something where I can choose either continue to sponsor or move somewhere else.
It's also a good way to test to see if you have there's a market for what you're doing. Right? So you can put this, you can put these pools together, put your proposal out there, and if people stake to your project, you get two things. One, you get people who have an active interest in making sure that you succeed, right? And two, you got the confirmation that there is a market for your product. So
awesome.
We're pretty excited about it.
It's cool. It's a great concept. I like it a lot. Yeah. Wish you guys the best of luck.
Thank you, man.
Yeah. We'll talk more about it. Thanks for coming on too. Yeah. I know we met each other last year at Consensus. We're all looking at each other. Yeah. Of course, I feel that way about almost everybody in the space now. Right. I'm like,
aren't you my cousin?
I know you. I don't know where from, but I know
Actually,
you.
We were talking that it seems like there's an older crowd now. Like
we're older, man. That's the problem.
The space is graying us. I love the space. I love the people. It's a good place to be. So think about joining the blockchain nation, man. Come on board.
Yeah, come on board. What's the social media website? How do people find you guys?
www.pledgepool.io. PLEDG and please, and you can reach out to John or I at hello@bennyfi.com. hello@bennyfi.com.
And on Twitter, we're BennyFi platform.
Actually, here you go. Okay, can I show that? There's a QR code.
Oh, the QR codes on there. We'll try to show that.
Put the cameras out, folks. There you go.
All right, and with that,
thanks,
Brian,
thanks again.
Thank you. John, pleasure. See you soon.
All right, well, there you have it, folks. Another great show here at the Impact Money Show. It's always fun. We'll be back on your TV sets in about 5 hours from now with more reports, more coming up. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.